So in today's live stream, I'm gonna start by looking at looking at gold, what the market is doing so far on gold. This is a trade I'm watching as well. Most likely gonna get an entry into this one. And I talked about this trade entry last week. I set a buy limit order on the trade as well, which I later removed because thank you so much for your confirmation. I later removed the limit order because price did not mitigate my position. It came very close right here. The red line is my entry. So price came very close to my entry and then reversed and started going to the upside. So I basically just removed the entry. But as you can see, so far price is still coming very close to that key level. We're not really far away from the point of interest. And right here is the point of interest, 0.61% for us to hit that key level. And that will be around 1.4% on the day for gold to the downside. So I'm very confident about this trade setup. And the reason why I'm confident about this is also something I'm going to outline as well. And the first reason is because price came to the downside, mitigated this inefficiency on the weekly. And then if we go to the daily time frame, on the daily time frame, there's not really so much to work with besides this candle, the last down close candle before an expansion. So we'll go to the 4-hour time frame, and on the 4-hour time frame, you can see clear as day we have an inefficiency here. I'm going to outline that as well. So right here, we have this inefficiency. Price came into the inefficiency, mitigated the inefficiency. So after this mitigation, what I would like to see right here would be a 15 minutes break of structure to the upside. So I scale down to 1-hour time frame. On the 1-hour time frame, you can see very clearly that we have a high and then we'll have a low and we broke structure. And this right here was the last down close candles before expansion that broke this structure. So the moment price mitigates this position, I would like to see either a 5 minutes break of structure or a 15 minutes break of structure. So if we go to 15 minutes time frame, you can see clear as day will create a high, a low, and we broke structure right here. And after breaking structure, the next thing I would like to see would be for price to retest this key level right here. This key level is what I would like price to retest because this was the last down close candle before an expansion to break structure right here. So let's look at 5 minutes as well to see if there was a break of structure in 5 minutes. And on 5 minutes, we'll have a high, we'll have a low, and there was a significant break of structure as well on 5 minutes time frame. And this was the last down push before expansion to break this 5-minute structure. So we go to 1-hour time frame. What we're looking for on the 1-hour time frame now is the liquidity. The price could potentially come down to mitigate before a potential reversal if we're going to continue to the upside. How do we see that liquidity? We use the line charts to make it much easier. On the line chart, we can see we have a high, a low, and we'll have a break of structure right here. And this was the last down close candles before expansion to break structure. And the low of this candle is our liquidity. That is why you can see the red line resting right there. So once price comes in there to mitigate that position, we're looking for a buy position. So we want to see the market come to the downside to mitigate this key level. And if it mitigates it and we see a 3 minutes break of structure after that mitigation, then we're going to be looking for a buy setup, price to potentially continue to the upside. Now, as you can see on the 30 minutes time frame, you can see where the red line being the liquidity zone is resting. We want to see an inefficiency resting above it, and right there is a beautiful inefficiency. We'll go to 15 minutes time frame. On the 15 minutes time frame, we see a beautiful inefficiency resting above it as well. And then this was the last down close candle. So when price mitigates this position, I'll be looking out to see a 3 minutes break of structure to the upside. If I do see a 3 minutes break of structure, I'll be looking for a buy to get into the marketplace. And if for any reason I don't see a 3 minutes break of structure, then most likely it means the trade may not work. But in the meantime, I think I'm just going to place a limit order, probably risking between 0.1 to 0.2%. And I'm just going to put a limit order right here, stop loss below this low. And I'll be targeting low resistance liquidity highs. So you can see we have a low resistance liquidity resting right here, low resistance liquidity resting right here as well. So I'm going to be targeting this high and this high overall. Once we take this high, I'm going to be on the sideline. So overall, this is almost a 1:2. It's literally a 1:12 risk to reward ratio. And hopefully we do get that trade this week. We have a lot of high impact news this week, so make sure you trade carefully, trade with a stop loss, use minimal risk, because anything can happen in this kind of environment. From Thursday, Friday, price action seems is gonna be very weird and very complex, something you most likely wouldn't like to be in the marketplace, because price tends to go up and down and very volatile because of these news drivers. And even on Wednesday we have this 3 high impact news by 7 p.m. It's literally one of the most volatile high impact news I've ever experienced in my entire career as a trader. So just be mindful of that and very careful. Don't try to trade against the trend. If you're on any trade, make sure you're trading with the trend. Don't counter trend. Trade just with the trend. So that is what I'm going to be watching on gold. Hopefully the trade plays out and we can all make some money from that. So that is my analysis. And if for any reason we drop lower, take this low, then that means the trade is entirely invalid. And the next thing we're going to do will be to reanalyze and see key levels price could potentially come back into. So that is my analysis on gold. I'm going to look at Nasdaq as well. So on Nasdaq, as you can see, we're still at the same position we were at yesterday. We've not really done so much on Nasdaq. I remain bullish. My next draw on liquidity on Nasdaq is the key level you can see on my chart, this red line. Why this red line of every other part in the chart? The reason this red line is my next draw on liquidity is because when I'm doing a quantitative analysis to ascertain how high or low price can go, for judging from this low right here that created this overall high and broke this structure, 1 hour structure from this low to this high, that's a 4% move. So after retracement, I'll be anticipating for a 6% move, which is 4% plus 50% of 4%, which is 2%. 4 plus 2, 6. So we'll go to 4 hour and we go from this low, we look for 6%, and 6% is right here. Inefficiency. Now, a quantitative analysis is basically not worth much if you can't determine any point of interest resting at that key level. So, for example, the quantitative analysis is showing me the next impulse should take us to 6% move to the upside. I need to see something that could potentially draw price to the upside to make this 6% move, whether it's an inefficiency like you can see right here, or whether it's liquidity like you can see right here, or whether it's a low resistance liquidity as you can see that resting right here. So the fact that quantitative analysis could potentially say, show me price could go for a 6% move, it doesn't mean that once you get to 6%, that's it. That's not what it means. So price can decide to go to 7%, decide to go to 8%, and overall, this overall high is 7%. And price can decide that the next impulse move, I want to go to all-time high, and I want to run through this low resistance liquidity, and that is where price is going to be. There's nothing you can do about it. So all we're doing is following price. We're not trying to counter trend. We're following the trend. Whatever the trend wants to do, if it's bullish, we only focus on looking for a buy. If it takes us out, we'll still look for another buy until we get into a very nice, beautiful entry. So that is my analysis. And we're going to look at AUD US dollar as well. So for AUD US dollar, I was looking for re-entry into the marketplace. And right here, as you can see, after price tapped my target. This right here is my first target on AUD US dollar. That was why I told everyone to close their trade. You can see what happened after price tapped my target, reacted from there, and we saw this rejection, and the rejection came down to run sell side liquidity. So we want to see what price is coming down to see if we can potentially get a re-entry into the marketplace. So right here we have inefficiency, not really so much to see. And right here we'll have liquidity, we'll have the low, the high. If we use the Fibonacci from this low to this high, we're still in discount. We use the weekly, from the weekly low right here to the weekly high. If we're buying, we want to buy at a discount. You can also see that price tapped the premium level, and then we saw that rejection after mitigating the premium level. So I still remain bullish on AUD US dollar, but irrespective of that fact, we shouldn't be scared of a retracement. We've had 1, 2, 3, 4, 5, 6, 7 bullish candles. So it's very much expected for us to see at least one bearish candle. If we're going to continue higher, we need to see at least one bearish candle before we could potentially continue higher to still print more bullish candles. So if this key level right here, this inefficiency, if it doesn't act as resistance to send us to the downside and we blow through this inefficiency, then my next drawn liquidity is going to be this key level. That will be my next drawn liquidity. This would be the next one. Eventually, it will be the first key level that I'll be looking for price to gravitate above it. And we have extreme premium here. So my next drawn liquidity would be to run this low resistance liquidity, rally into this key level to mitigate this position. And once we're right here, I'm going to scale out more profit. I still have open position. I only took profit from my own position. And I still have open position. I only wanted us to close our trades for the academy because we're already at the end of the month and we just need to round up what we made for the month. And then new months, we continue to look for more entries into the marketplace. So right here, as you can see, this key level is the next draw liquidity. After that, another key level to scale our profits. So let's say, for example, for any reason, we still do another 3.5% move after this retracement. If we calculate from here, 3% move, you can basically see that is going to take us around in here. So I'm not going to be surprised to see that impulsive move. So right here, we're looking at the liquidity. Price mitigated this key level, took that liquidity because a lot of traders who are on a buy position, their stop loss is going to be resting right here. So the algorithm understands that and it's coming for them, wipe them out. If we're going to continue, this would be a very beautiful area for a reversal. So we'll go to the 1 hour time frame. On the 1 hour time frame, there's not really so much to see. So we'll look at 30 minutes. Not much to see on 30 minutes. We'll go to 5 minutes. On 5 minutes time frame, we can see very clearly we have a high, a low, price broke structure. We'll look for the liquidity. This was the last down close candle before expansion to break this high. So we want to see if price will potentially come down here before a continuation. So personally, I'm not really so keen on taking this as a trade, but I'm just going to be watching it. So if I was to get in on any trade on AUD US dollar, this would be how and where I would most preferably get in, and I'll still have the same targets as well. So I'm not really gonna, I'm not entering this trade. It's just not the best kind of trade that I like to enter irrespective of the fact that it really looks good. And low resistance liquidity resting right here. Go to 1 hour, 4 hour. If I'm on this trade, I'll be targeting at least this position, which is another 11.8. So I can just make it 1:12. So if I'm going to be entering this trade, that will be my take profit position. So I'll be watching this very closely. And I'm not a big fan of the trade, to be honest. I don't like the trade, but it can still work eventually. And after this live stream, I'm gonna watch this closely. Even though I may enter this trade on my personal account, but I really doubt I'm gonna share the trade idea with the members because it's not really the best of trades, my opinion. But it could play out, and if I'm risking 0.1 on it, I could make 1.2%. And if I lose 0.1%. I can't be bothered for losing 0.1% of my account. So that's just it for this AUD USD trade. So we're going to look at the dollar as well, what the dollar is doing. So far, I'm not really a big fan of the price action on the dollar. It's just up and down. I expected it to come to this equilibrium zone. After mitigating this 4-hour inefficiency, we mitigated it, rejected off that key level, came to the upside again. So I'm not a fan. And I won't be surprised if we eventually run above these highs. I absolutely will not be surprised if the dollar goes higher to run all these buy stops. I will absolutely not be surprised to see that. So that is why I'm not really paying so much attention to what dollar is doing today, because the price action is just very lethargic, very back and forth, back and forth. Usually when we're this back and forth, I just prefer to be on the sidelines. On Euro, GU, I just don't like trading them because you could be in a buy and then price for some reason reverses, takes you out. You can be in a sell, takes you out again. So I just don't like putting risk in the market in situations like this. So we look at Euro as well. You can basically see Euro just very, very lethargic price action, and we have low, high resistance liquidity here, high resistance liquidity here. So where is price going to go eventually? And we also have weekly inefficiency here. So maybe we reject of this weekly inefficiency and we'll continue lower. It's possible, and we have a low, a high, and then potential break of structure. So this might be price visiting this inefficiency for a potential drop to run this sell side liquidity. It's 100% possible. So I just don't like the price action on Euro and on the dollar. It's a little bit confusing where price wants to go, and I totally understand why it's that way. The reason is because of the high impact news we have tomorrow on Wednesday. Like I said, 7 p.m. high impact news. This is one of the reasons why price is the way it is. And another reason is also on Friday. This is also another reason why the price action is the way it is. So my personal opinion, instead of trying to trade and jump into whatever you see and then eventually lose whatever you've made for the month, it's better to be on the sidelines. It's just a couple of days and it's all going to be over, and we focus on clearer price action. So that's basically how I see it. So for today, my only interest for trade is gold. I'm only interested in buying this gold. That's the only interest. So if you see any trade idea from me, it's definitely going to be on gold. So that's all I'm watching. And if you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you in the next live stream. Have an amazing day, everyone.